All right, good afternoon, everyone. Today is Wednesday, the 30th day of April 2025. So we just finished up our last trading day of April, and we had actually our best month ever, really. $35,530 with one contract for the month of April. The last week, I was really hoping to keep this number. This was the average daily amount for the 2 hours that I traded in the morning. It was the average daily amount, and I was hoping to get that over 2,000 bucks. It was over 2,000 when we started the week. But then we had a couple of days that weren't so productive, yesterday being one of them. And we had kind of, good days, but not great days. Um, but it was a great month. We had some really good volatility. We actually had my best day right there of the year, $4,177 with one contract. Um, and that's all trading this stuff, all the stuff that we normally do in here. And let me close that one and that one. I'll bring up this because I haven't done this yet. tvtrades.com. If you haven't taken a trial, go here to tvtrades.com. Sign up for the trial. Just click on one of these things that says where the trial is here. Click on one of those. Go down to the bottom. The trial is, if you do it right now through the link that was sent to the email, to the invite to the email, or the one's going to be sent out later. It's a 4-day trial actually. But after the trial, it's 25 bucks a week or 90 bucks a month or 9.97 a year. The annual is obviously the best deal, but most people go for the monthly. Either way, it's really inexpensive to get started. Yeah, the stuff that, well, one of the things that I just showed you guys is Telegram. Now, I do, as far as TV trades go, I don't do a ton of stuff in Telegram, like manually putting stuff in there, but we do have Telegram channels where stuff gets delivered every day. There's a ton of things that get delivered to the Telegram channels. We have these Telegram channels. Hang on. This one right here is one of Telegram channels, TV Trades Future Signals. It's got 184 trades since the last time I looked at it. There is this one, TV Trades Trade Signals. This has got stocks and ETFs. All right, I had 126 trades since I last looked at it. There is this one right here. That is a TV Trade Swing Trades. There is nobody in that one yet because I'm still working on it. I know I keep saying it. I've been saying that for 3 months. I'm still working on it, but it's swing trade, so I don't get to see 10 of them a day or 30 of them a day. Like I do with the regular trades that I do. You can see right here today. There's been 1, 2, 3, 4, 5, 6, 7, 8, 9 swing trades, and I'm changing the way that some of these things are done. Like this one, obviously, you can see right here the numbers are need to be formatted so they're not the same. But that's all. That's all stuff that you're going to be having access to. The TV Trade Swing Channel, TV Trade Swing Trade Channel, and the also the TV Trades NQ only channel, because one of these this future signal ones, it gives a lot of trades, but a lot of you guys want to see the NQ trades, and depending on what time frame I look at, I can we can generate a ton of NQ trades. So I was thinking about just making an NQ only channel. And as of tomorrow, the private web page, I'm gonna close the private web page tomorrow because it just became too much of a hassle to try to keep the passwords right for everybody. Everybody had different browsers and everybody was having problems trying to get it every time I changed the password. And that's a large reason why I didn't change the password for 3 months. Because it was such a hassle. So starting tomorrow, I'm going to be getting rid of that private web page, and you'll have private web channels instead. Okay. Now, there are a lot of things that I wanted to go over. But I want to give you guys a chance without the optimum. That is correct. Yes, Wayne. In the room in the morning when I'm trading, I just use the basic range trigger. Okay, in the room when I'm trading, I don't use anything special down here. It's just the basic range trigger because that's all that anybody in there has access to. If you're a TV Trades person, then you have access to everything that TV Trades has. You get access to all the TV Trades Telegram channels and all the TV Trades functionality, even the beta stuff. Some of you guys don't have the beta stuff right now because you didn't ask for it. But if you want access to it, all you have to do is ask for it. Like the TV Trades range trigger beta. That is a feature that I worked on quite a bit in the past month, and I'm still working on it. But but it is a great tool, and the actual positioning of these signals down here is excuse me, is the same as the TV trades is, but there are other things that that you'll see benefit you. Damn, Joe said beta, love it. I know, and I mean some of you guys like different things about it. Like I think you like these horizontal lines. I mean these vertical lines, right? Wasn't that what you liked? And some people don't like the vertical lines. So so I mean you can put those on and take them off if you want to. But um, the stuff that I have in here, I'm eventually going to merge it all into one thing, so I don't have 100 different indicators to set. Like in here, in your invite only, you probably only have a couple of things, but in my invite only, I have all these other things that I've created that I'm working on, that I'm slowly trying to merge into one thing for you. Um, so we did end the month. We ended the month on a pretty good day today. We're up $1,462 a contract with 10 contracts on. It was up $14,625 this morning, so it was pretty good. It's not banner, it's not even the average, but it was pretty good. It wasn't yesterday where it was up $720 a contract. I don't know what happened to me yesterday. I don't know. I was off 2 days this week. I was really off. I just didn't feel right, and yesterday was one of those. But yeah, so the stuff that we did this month, we introduced the TV Trades beta, the tri range trigger beta, all right, and we also introduced the TV Trades in here. We have the beta in here too. Where is it? Down here, beta display optimum bar profit value. So what that does is when you have the optimum trigger on down here, once it gives you a trigger, it shows you what the profit value is. Okay. Now it's a beta because I wasn't. Sometimes it would display it on every appropriate bar, and sometimes it would skip a bar. That's why it was still a beta. Okay. How many trades do I take on the NQ, and what time? How many hours do I trade, and what time do the signals work best? Okay. Well, that's a lot of questions all at once, but let me just say this. I don't know exactly what time the signals work best. I know they work well for me pretty much every time that I trade. I typically trade 9:30 in the morning, well 9:27 in the morning. It's important that 3-minute difference is important. I trade 9:27 to 11:25 in the morning, typically. Okay, that's Eastern time. And how many trades do I take on the NQ? It varies. I don't get every trade, not even close to every trade. I don't trade just the NQ in the morning. I trade the NQ, the ES, the Russell, and gold typically. All right. So, and what signals work best? It depends. The conservative signals is what I do primarily. Lately, that's what I do primarily. Now, the conservative signals, they are best when you're in a trending market. Okay, when you're in a trending market, they're best. So, what a conservative signal is, let me just show you. All right, let's go down here and let's just we can do it with the QQQ. You can do it with anything. You mentioned the NQ, so I'll turn the NQ on for you. We'll just with the NQ. Okay. The NQM contract. We'll just do it with the NQ. Okay, so a conservative signal means if you have a blue background, you're going to go only long trades, and if you have a red background, you're going to go only short trades. Now, the really conservative thing, you're going to be doing this. Let's just get rid of that for a second, so you have just a regular slingshot, and you don't even need any colors down here. With the conservative one with the red background, you're going to wait until price gets into the overbought and comes out of the overbought. That's your conservative entry. You wait until it comes out of the overbought to take the trade. Okay, for a short, you would wait for it to come out of the overbought. For a long, you'd wait for it to come out of the oversold. That's a conservative entry. Okay, Harold? Now, that is just using the basic tools that you have in here. It's not using any of the specialized tools that you have. And, in the past year or so, this has come a long way. Everything that we've done has come a long way. Originally we didn't have anything down there for oscillators, and the only thing we had showing up here were these two guys. That was it. We had those colors. We didn't have this. This is what it looked like originally. Okay, you just had this arrow and this arrow. Those are the only things that we had originally. And they work. They work great. but they don't give you a ton of trades, but they work great. They generally hit at the beginning of a trend, okay? And if you have like a blue on a red background like that, it would let you know ahead of time that there's a trade. And a lot of you guys that are in here right now, you probably don't know, but there's alerts that are associated with all these things. So up here under alert, if you go to here and you do TV trades, there are customized alerts in here. So for this right here, you would just have a buy alert, right? The buy alert right there is all you would have. And if you check that, you can right down here put your own message in there if you want to. You should do once per bar close. Put whatever message you want in there. And in here you can do the different kinds of notifications you want, right? This is what actually sends it to the Telegram channel. And you can set up these alerts for yourself. Now, this alert that I just chose right here, the one that was, I haven't gone over this stuff in the longest time, so I thought I would just go over it today. The one that I chose is a buy alert. That's the blue arrow. All right, the sell alert is the red arrow. Okay. Okay. Well, it's changed. It's changed a ton now, Harold. A ton. But hang on. Before I answer your questions, let me finish explaining this. All right. When you get a blue arrow on a red background like that, that gives you an alert that lets you know that the next bar is likely to be the trigger. Okay. If you get a red on a blue background like that, it lets you know that the next arrow is likely to be, the next bar is likely to be the trigger. It's not always the case, but you got a blue right there, the next one wasn't a trigger. Okay. It's not always the case, but most of the time it's going to be. And there's an alert for that. Okay, it's called a notification alert in here under TV trades. It's called the trigger short potential, not that one. Advanced notice, the buy advanced notice and sell advanced notice. That's what these two are right here. The buy advanced notice, when you get this, it'll send you an alert. Now that alert can go anywhere. It can go to your screen, it can go to your phone, it can go to your headset. If you have your app on your phone, it'll send you an alert ahead of time to let you know that the next bar could be the one that you need to place a trade on. So you don't have to be paying attention to the charts at all. It'll let you know ahead of time that that's likely to happen, and then you can get ready to put your trade on. Okay, that was the whole design. That was my original concept was so that you didn't have to be sitting there watching your charts all the time. You didn't have to have any indicators on your charts at all. All you were given was just an indication telling you, okay, it's time to take a trade, and you put the trade on. And originally, it's on the NQ right here, and it works great for the NQ too, but originally I did it for like stocks. I don't know what this one's going to look like, but we'll just look at State Street, some company that I used to work for many moons ago. See, I did it for equities to begin with, and so you would get an alert that says, okay, get ready to buy. And you can buy, and if you're doing options, you could buy calls right here. Over here, if you're doing options, you could buy puts right here. That's what it was originally for. Okay. And then, because most of you guys have been with me for years, and most of you guys trade futures, it works great with futures too. You saw I just changed from without even changing the time frame. I changed from futures to stocks without even changing the time frame, just by changing the symbol. I changed. Okay. That's what it was originally designed for. So you could jump back and forth. You didn't have to spend a ton of time learning or anything like that. You could just get in there and trade it. So, I built on that over the year. I built on that a lot. And there are people that wanted to see trades that happened, because these only happen once per trend, right? You only get one blue bar per blue color, one red bar per red color. That's all you get. If you miss the first one, you don't get another one, right? So then people wanted to see the mid-trend trade. They wanted to have something that happened in the middle. So I created the mid-trend trade for you guys. It's down here. All right. Now you have a mid-trend trade, something that happens in the middle as well. All right. And these little black arrows let you know ahead of time that the next one could be the trigger. It doesn't let you know on every one, but most of them. It lets you know that the next bar could be the trigger. And those work well if you wanted to do that. Just that stuff. And that's just on the TV trades. Okay. If you're getting a buy or sell alert from the chart, why would one look at the trade alert? John, the idea is that you're not looking at the chart. All right, the alert, the whole reason to have the alert is so that you didn't have to sit there looking at the chart. Because a lot of people aren't, especially when you're talking about the equities. Like if you look at the equities, sometimes you get one a day, something like that. And if you're only going to get one a day, you're not going to want to be sitting there. You're not going to want to be sitting there, waiting all day long for that one alert to come. So it lets you know ahead of time that you have an alert likely to come on the next bar, and then you can start paying attention. It can alert your phone. The question was, it alerts your phone. The other question was, if you're getting a buy or sell from the chart, why would you have an alert set? I was answering that. If you're not looking at your chart, if you're not trading off the charts, and you're doing equities, you're doing ETFs or something like that, you're doing options, and you're not sitting there looking at your charts all day long. That was the idea, to get out of the pigeonhole that we were in with scalping futures for 2 hours a day. With this, you don't have to be sitting there. You can, it works great if you do. It's your choice, but you don't have to be. You could be, you could be anywhere. I've done this stuff from all over the world. I've done this stuff, really, literally. I've done it in Europe. I've done it in, I've done it in South America. I've done it in Canada. I've done it all over the place. And so you don't have to be sitting anywhere, you know. Yeah, Jose, that's not this. And you're talking about the ribbon. I think you're talking about the ribbon from the morning session, right? And I don't even use that in the morning session anymore. But there is a way to put the ribbon on here if you want to put it on here. There is a way to put the ribbon on. It's inside the sniper. To put a ribbon on. All right, I don't use it, but it's inside the sniper. If you put the sniper on there, no. The sniper and the TV trades is just too much. You shouldn't have them both on at the same time. But if you do put the sniper on, in the snipe filter right here, if you make that a 777, it'll give you a ribbon. I think. There it is. You get a ribbon. Okay. Jose? But, again, the sniper is a different thing. I didn't get to the sniper yet. But it can alert your phone, John, yeah. The alert in here on your notification, the app, if you have the mobile app running on your phone, whatever brand of phone you have, if you have the TradingView app on your phone, and you have your app set to notify, then it'll notify you right on your phone. Okay, it'll send you an alert on your phone. I get them all the time. I just got one a second ago. I'm right here on gold. Let me see if I can send that. Nope. I clicked on it and it just showed me the chart. And I got another one from Rare Earthlink and Babe 3. Nope. Hang on, I'm trying to find. Oh, there'll be another one coming, I'm sure, here in a few minutes. But they pop up on my phone all the time if I have them set to. And, the alerts show up over here. All the alerts show up over here. And here's a log of all the alerts that have triggered, today. These are all the alerts that triggered today from the ones that I have set. So you can see there's a ton of them. This is going back to 11:37. So the last 4 hours, all those alerts have triggered. The different things that I have set. But that's for all the different channels and everything else too. Okay. Yeah, I know. We have Wayne. We have some people that had the alerts. You can set the alerts to play different sounds. In here, if you go into this side, you can do these sounds in here, and there's a bunch of different sounds. You do nature sounds, horses, knock knocks, callings, all these different things. And I know I had one of the people in the morning had all these crazy sounds going off all the time in their house, like breaking glass and cash registers and things like that. So be careful what you do there. You can drive yourself nuts. Okay, so Harold, I think I answered your question about the NQ, right? And if you're getting a buy or sell alert, okay, I answered that one. And alright, so I think I answered all the questions. Now I got a little sidetracked here when I was talking about stop loss and to take profits. Okay, I have that listed in here. If you go to this page, I got capital X on. I guess I did. If you go to targetviewtrades.com and go to more, risk management is right here. Go to targetviewtrades.com and click on more over here, and down at the bottom it says risk management. For the different range bars that I use, this is how I do my risk management. Alright, that's how I do my risk management for the different bars that I use. Now, the question was stop loss and take profit. That's what Harold had asked. So again, to get to that, go to targetviewtrades.com, go under more over here, and click on risk management. Now, one of the things that a lot of you guys that have come in the last like 6 months or something like that, you may not know about is if you do go here to targetviewtrades.com, under here, if you look at here, I have little videos about all these things that you probably haven't even seen, like the mid-trend trade, the long buy arrows, the short sell arrows, the risk-reward ratio stuff. There's videos about all that stuff, the target lines, the bias levels, TV trades target lines, bias levels. Now, I don't use the target lines so much anymore. There was a lot of stuff that the target lines was based on stuff that's in the trade table, and the trade table is really resource intensive. So I kind of try to stay away from the trade table now, because the more stuff that I created, the more resources it was using, and it was some things were slowing other things down. So, but the target trade table and all that stuff, the mid-trend trade, that's in there too. So you can go through and watch these videos if you want to. There's actually the sniper has got its own section right here, and the trigger has got its own section right here. Okay, so if you want to learn about those particular things, the sniper and the trigger, they have their own sections. You can check that out. Alright, if you haven't set your charts up yet, just go to setup right here, watch this video. I don't remember how long it is. It is 7 minutes long. Okay, and it's a little dated. That video is probably a year old or something like that. I don't know, I'll tell you. Let's go forward until I see a chart. There's a chart. I thought it was right there. Yeah, there's a chart. So let's hit play on it and see what the month is on that chart. Let's see. That is, oh, it's NASDAQ, so I can't tell. Let me put that down and see if I can see the date down here. I can't. Okay, well, it doesn't really matter. But all this stuff is out here on targetviewtrades.com. There's a ton of information out there for you guys. If you haven't gone there to look at it and you don't know how to do something, it's probably out there. Again, if you don't know how to do something, you can text me at my number, my 617-943-32 blank blank number. Most of you have that. If you've taken, if you've signed up at all for the trial or anything like that, you have my phone number. You can text me at that number, or you can email support at targetviewtrades.com. Support at targetviewtrades.com. Okay. Back here. Okay. So, some of the things that I wanted to go over today. It has to do with the trades that I take in the morning session particularly, but the trades that I take in the morning session are the same trades that you guys would be taking. All right, same trades that you guys would be taking, except you have more tools, that you know things. There's actually, the TV trade stuff is better than the stuff that I do in the morning. The stuff that I do in the morning is actually more complicated. There's more to it, and it's more complicated. For the TV trade stuff, it's a little more sensitive, a little more accurate, a little more sensitive. But so when you have a blue background, you would only be taking long trades. And so, with the optimum trigger, if I take that off of there, with the optimum trigger, you're going to have opportunities to get into trades with the optimum trigger that are way before the trades that trigger in the morning session. And that's a good thing. You're going to have opportunities to get into trades that you may or may not think about getting into normally. But what I wanted to show you, if you're using the trigger, when you're being aggressive with the trigger down here, That means you're taking trades when it goes into the overbought or trades when it goes into the oversold. Let me fix this so I don't have all those lines down there. You're taking trades when it goes into the overbought or into the oversold. Let's get rid of that one. That one. There you go. And we'll get rid of the center one too. That one. Okay. When it's just going into the overbought or just going into the oversold. If you're taking trades like that, the times you're going to stop out is when you get flat spots. All right. When you get flat spots like that, that's when you're going to stop out. So to minimize the number of stop outs with the flat spots, you have to understand when the flat spots are likely to come, right? Jenny, the middle line that I just took out, that middle red line, what's the significance of that? It doesn't really have all that much significance right now. The middle area does, but you don't know about it yet. It's figured into some other things that you don't know about. But but the red line, I've been working on a good thing to use that for. And every time I get something to use it for, I end up doing things behind the scenes that make it not able to be shown with just the red line alone. So I don't really have a good thing for that. And why the color changes in here? Because when it turns white when it's going into the overbought, that's usually a good opportunity to sell. When it turns white when it's going into the oversold, that's usually a good opportunity to buy. Okay, now it doesn't take into account the background color. So if you have red for the background color, you're going to be looking for the ones that go into the overbought. They're white going into the overbought. If you have blue for the background color, you're going to be looking for the ones that are going into the oversold. Okay, they're white going into the oversold. And, you know, they're not conservative trades. They're aggressive trades. Okay, because the conservative trade, you're going to wait for it to come out of the oversold. You would get a trade that's going to go like this. And if this is what I was getting toward, now that you asked that question, what I was getting to, if you have a big run up like this, then the pullback is likely to be drawn out. All right, you're likely to have a flat spot. You get flat spots when you have long leg lengths. All right, when you have short leg lengths, you're not going to have the flat spots because it's just bouncing back and forth between overbought and oversold. Now, it takes 2 bars to get from the overbought to the oversold or the oversold to the overbought. So if you have a leg length that is multiple bars like this one right here, a leg length that is multiple bars like that, or a leg length with a gap in it like that, if you have that kind of a leg length, then the follow-up leg length is likely to give you a flat spot. Okay? Let me say that again. Well, let me first identify the issue. Okay? The issue is if you're being aggressive, that means you're taking, like, it goes down into, well, okay, these aren't really good examples because every one of these is working, but this one right here, for instance, I guess, every one of those worked. Let me just go to find one that didn't work that well. This is kind of a good example here. Kind of a good example. What the heck is she doing here? Huh. Well, this is kind of a good example here. We had this long leg down, right, and it put in this big flat spot right here. When it pulls back, you can anticipate a flat spot on the pullback because price is trying to go. What it typically does, it'll go down like this, and then it'll usually do roughly a 50% retracement back. So if it's going to do a 50% retracement, that's going to be multiple bars going back up there. It's not going to be just 2 bars. So to get from the bottom to the top is usually just 2 bars. All right. You can see right here it took way more than 2 bars, but this is a stock. It's not the NQ. Usually with futures, it's going much quicker. And we'll just jump to futures really quick so you can see the same thing that I'm trying to show you. See, when you have a big leg down like that, usually it's just 2 bars going back up. And if it ends up being more than 2 bars, you're going to have a flat spot. And the flat spot is typically where you stop out. All right, so to avoid the flat spots, if you have long legs, then don't be aggressive, be conservative. What does that mean, you ask? Wait till it comes out of the overbought or oversold. Don't trade when it goes into it. Recognize that you have a trade there that, you know, it's going to go down. More than likely it's going to go down. But if you have a long leg length right before it, then the leg length that's triggering right there when it goes into the overbought is probably not the very spot you're going to short. Wait until it comes out of the overbought. Alright. Oops. Sorry, I didn't mean to draw that. I started putting something together, you know, a list of things that are just like best practices. And, you know, I want you guys to be able to just see this stuff, see the trades, take the trades, doing whatever it says, and it works if you do that. It does work. But the more you trade, the more you put yourself at risk, right? And if you have a great morning and you're up really well in the morning, and then you start taking every trade, and then things start to go south on you, then you're gonna end up giving away all the money that you had, and then you might end up negative, and then you're gonna be kicking yourself because you overtraded. Um, but what to think about, and just, the markets are always doing the same thing. I say this in almost every video I make. I say this, right? They're going up and they go down, and then they go back up, or they keep going down. So the thing to look for, the turning point in the market, you know, some of you guys may or may not have asked for that thing that I showed you that had the three different types of chop in it, right? You have your channel chop, that's like that, right? Your triangle chop, that's like that, and your bugle chop, that's like that. The bugle chop is usually at a trend change point, all right? This is the best kind of chop to trade in, and in this kind of chop, you want to be aggressive. You want to trade when you go into and out of the overbought and oversold. As soon as you go into the overbought, you want to sell the next bar. As soon as you go into the oversold, you want to buy the next bar. All right, that's the kind of chop this is. Like you go down here, you buy the open of the next bar. You go up here, you sell the open of the next bar. You go down here, you buy the open of the next bar. You go up here, you sell the open of the next bar. That's what you do in that kind of chop. With the triangle chop, which is this kind of chop right here, all right, and that would be sort of the way this was right in here, okay. You can tell, you have a pretty good idea where it's going to go from top to bottom. You know where the top's going to be, you have a good idea where the bottom's going to be. When it finds the bottom there, it's probably going to go back up and find the top again, and then go back down and find the bottom until it gets out of it. So you have a pretty good idea where a price is going to go. So you can be aggressive or conservative, but usually just aggressive with your trades. Trading back and forth in there. Now the bugle kind of chop, that's this guy right here. All right, that's what happens when you're like this, where you have higher highs and lower lows. All right, now you didn't get the lower low until it dropped down below here. Then you got your lower low, right? Right here, it wasn't bugle chop. It was kind of channel chop. You know, if I drew this a little better, it would be like that. It was kind of channel chop right there. But when it failed and it turned into bugle chop, that turns into a trend change potential. Okay, now let me erase these drawings and I'll show you that again. Okay. So this is what ended up being your bugle chop, right? Now the problem with this is you don't know where the top is and you don't know where the bottom is. All you know is you have this big leg right here. All right. Now originally you were probably, well, because it's got a red background, you probably weren't so much thinking it was going to be a long trade. But when it does that, when it pulls back, you're probably thinking right here is going to be the spot that it's going to get to. All right, and it's a potential trend change. Let me find another one that's, because that has a red background, so that's not going to be the ideal scenario. Well, anyway, there was one today that I did today that was exactly that. There were a couple today. When you get that kind of a chop, where it's a bugle, where you have higher highs and lower lows, then it's usually a trend change point, all right, where the midpoint becomes significant. And right here, you can see that was a trend change. So if you're looking at it just like this, right, you got your lower low here, you got a higher high, higher above this level, you have higher highs, and then you got a lower low. That usually indicates a trend change point. So you'd expect it to come back here to the midpoint and bounce back down. If it fails to bounce, then expect it to go completely in the opposite direction. Okay, and there were some really good examples of that today that I was able to show people. It was at the end of the session today, and I think it was in gold. It might have been on the NQ. Let me see, was it on the NQ? It wasn't on 100 range, I know that. It was on a 47 range. And it was this morning. I can go back to that spot this morning. Yeah, it was right in here. It was right in here. It was this move right here. Once we had established, we were in an uptrend, right? It was going up and down and up and down and up and down and up, and then it went down below this level right here. And I said this morning, before it all happened, I said look for it to get back to here and probably stop there. That's what I said this morning, and I can go and show you this on the actual workspace from this morning. But I drew a line on it like that, and it just kind of stuck at that line until I was done with the afternoon session this morning. Not the afternoon session this morning. Until I was done with the afternoon session today, and that was at 1:30 that I finished that. And you can see it was right in here. It actually finally broke away from it a little bit during the afternoon session right here. So at 1 o'clock when I started my part of it, it was still going back and forth all around that level. But but you see, when you get that slice of chop right there, that opens it up to the top and the bottom, then this midpoint becomes a potential turning point in the market. I know I'm saying a whole bunch of words. I do normally trade at 50, but I changed it to 47 this week, Michael. So because it's 12 points, if you just if you're doing the math, when you're doing a conservative trade, when you're doing the conservative trade, when you're doing a conservative trade, you're waiting for it to come out of the overbought or oversold, so you can be proactive with the order in that case, right? If you're waiting for it to come out, you can say, all right, I know it's going to come out on the up close of this bar, so I'm going to put my buy stop order on ahead of time. If you're doing that, and you do it on a 47 range, then it's 12 points from the bottom of the bar or the top of the bar. Right? If I wasn't going to do a 47 range, we'd do a 51, and then it'd be 13 points. 13 points from the top of the bar or the bottom of the bar, but I think people do their 12s mathematically better than they do their 13s. So I was going down. People do their 10s really easy. So I could break it down to something that's going to be 10 ticks, but I don't think you really want to. I mean, you can't do that because it's going to be a multiple of 4. So people don't do their 12s. I guess you could do it by 10s. I guess 10 points. It'd be 39 ticks. If I broke it down to a 39, then it'd be 10 points from the bottom or top of the bar. Yeah, the 39 ticks. That's right, Wayne. 39 ticks would be 10 points from the top or bottom of the bar. People do their 10s pretty easy. That would be an easy one to do. And that probably wouldn't be that bad right now, but there are times when the markets are going to be crazy that would be bad. But in that case, we could go to a 78, and then it'd be 20 points from the top or bottom of the bar, right? Something like that. 19, 20, 80, 79, be a 79. Anyway, I'm getting sidetracked. All right, Jenny, the stuff that channel that I showed you a few minutes ago in Telegram, this guy right here. I'll give you guys the link to that. You can all join it. It's a public channel, even though it's a TIQ channel. It's not a TV Trades channel. I can give you all the link to join that if you want to. It's got videos of me in the morning, some of the things that I was doing in the morning. It's not live trading, but it's just me talking about trades, and it's be a lot of stuff that I'm talking about in here. You'll see me doing there with a subset of the indicators. Actually, I'm only using the basic range trigger. But if you guys want to see that, I'll paste it in here, and I think I can hit send to all. There you go. I just sent it to everyone. Alright. It's 3:40. I almost used up the whole time already. What are the other things I was going to tell you about? I wrote down some things. Do not... Oh, what does that say? If the pullback is more than 2 bar lengths, do not... Oh, do not be aggressive. That's what that says. Okay, that's what that says. Wow, that was tough. It's not like I couldn't see it. I could see it. It's just I can't read it. Those aren't really letters. I don't think they just... I don't know what they are. Anyway, what I was saying there was a note to myself to tell you, if your pullback happens to be like this big and you get this, if your pullback is really deep, don't be aggressive. Wait for the conservative trade. Right? If you get a deep pullback, wait for the conservative trade. Don't be aggressive. Um, I basically was saying that earlier. If you have a longer leg length, then the pullback is likely to be bigger. So wait on that. Because it takes 2 bars to get from the overbought to the oversold. But if you have a long leg length, if this is like 8 bars right here, right? If that's going to be 8 bars from top to bottom, then the pullback is likely to be 4 bars. So it only takes 2 bars to get from the overbought to the oversold. So the overbought to the oversold is going to happen right here. But the full retracement is probably going to go another 2 bars, and that's going to make the flat spot down there. Okay, that's what that note was to myself, to tell you that. To try to identify the flat spots before they happen. These are all popping up on my phone right now. All these things that you see right here. I told you I was going to try to show you one on my phone. And there, I made a picture of it in case you guys don't know what it looks like. Send that to me, Telegram, because John L. was asking about the phone thing, so this is what it looks like if I send it to me on my phone. It just got here. Hang on. Let me do that and this. This is what it looks like on my phone. Okay, alert on the SPI. The SPY 50 range said to buy. The current price is at 55.08. The target is 552.38, and the stop is some other number down there. That's how it looks on the phone when you have it set to notify you. Okay. So it's pretty cool. Pretty cool stuff. So you don't have to be sitting there watching your charts all day long. Okay. And I don't know, that was an SPY 50 range. So let's go see what that looks like. SPY. And it was a 50 range. Oops, didn't mean to do that. Let's choose this thing. Here we go. That was this blue arrow right here that said to go long right there. And the target was, I believe it was right up here. What's the target? Okay. Pretty good stuff, right? Said to go long, and it's running up right now. That one, I don't believe I have an alert set for the notification. Let you know ahead of time if that's happening. And because I have this on, it's changing the bar colors. If I didn't have that on, if I come in here and I shut off that guy right there, and then you would see it gave a notification. Get a notification right here to let you know that you had a long coming up. Right, on this bar right here would have given you a notification ahead of time to let you know you had a long coming up. And this said on the SPY to buy right here at the open of that bar, I believe it said, right? And here it was. Buy current price 550.8 with a target of 552.38. So 552.38, it's looking right here for that to go up to. So 550.8 right here was the buy, and it's going up here. You saw the alert actually triggered over here a minute ago too, and you can see it in here as well. It was this one right here. Okay, so you can have them popping up wherever you want. You can have those alerts showing up however you want them to show up. But you can see that was a great alert, and it's going right up to the target right there. So I think when somebody new starts with TV trades, you get an email that's got so much information in it. I think it might be overwhelming. And so you can break it down into pieces, or you can just take out a couple of pieces that suit you the best. You don't need to learn how to do everything. You need to learn how to do one thing that consistently works for you. I know I'm showing you a bunch of stuff, and this is old stuff. This is what it looked like in the very beginning. When I first started, this is what it looked like. It actually looked even worse than that. It had the arrows were just these big arrows either down here at the bottom or up here at the top, and it had actual text. It didn't have this kind of alert over here. It had actual text on the thing that said buy next bar or something like that. it was pretty ugly looking way back in the beginning. I changed it around quite a bit and improved it quite a bit. Now, you know, I don't keep changing because it doesn't work. I keep changing to make it better. You know, I trade for a living, so I keep trying to make things better all the time because I created all this stuff. So the easier I make it for me, the easier I make it for you, and it's a win-win, win, really. Um, yeah. So this is what it looked like for the equities and stuff way back in the beginning. You know, way back in the beginning, we had Ray used to trade Exxon in the morning. He trade Exxon every morning on a 15-minute chart, and usually he would get a trade in the morning, pretty close to the open. He would get a trade, and he'd take that trade, and he'd do it for $1. And you know, he had like a whole bunch of Exxon to work with, like 30,000 shares of Exxon. So, you know, he would take that trade for $1. And that was the one thing that he did. He only learned one thing, and that was way back in the beginning. But all right, it's 3:48. I have 12 minutes left, so I want to cover another thing that came up today. All right, Bart and John Hill. I got both of you on my list. Chop versus non-chop. What was I talking about? Chop versus non-chop. Okay, yeah, I was in that case when I was talking about that. Let me go back to the NQ. Okay, the NQ is on a 15-minute. I don't really doing minute charts like this. Let's go back here to the 47 range on the NQ. Okay, so the chop versus non-chop. When you're in chop, it's going to be like this, you know, where you have just, it takes 2 bars to go from the overbought to the oversold. So if you have a couple of bars going from the overbought down to the oversold, then a couple of bars back up into the overbought, then a couple of bars back down into the oversold. This is chop right here. When you have chop like that, you can change your your trade type if you want to, from conservative, which is what you use when you have longer leg lengths, to aggressive, which is what you would use when you have shorter leg lengths. Now, to switch it to aggressive, you can just come in here and put this guy on here. Put that on, or you could change this around and put the div line on and change that to black. Or change it to a line, like that. That would be really close to what I do in the morning with the aggressive trades. Alright, but you can do the div line as well. Either one, it's the same result, the same thing that you're looking for. In this case, you would be looking for the blue to get into the oversold by itself, or to get into the overbought by itself, or to get into the overbought by itself. You sell the open of the next bar. If it gets into the oversold by itself, you buy the open of the next bar. If it gets into the oversold by itself, you buy the open of the next bar. If it gets into the overbought by itself, you sell the open of the next bar. But this is a good example of when you wouldn't want to do it right here. When you have multiple bar lengths like that, right? You wouldn't want to do the aggressive trade like that. When you have multiple bar lengths and longer leg lengths, you don't want to do the aggressive trade when it's like that. You want to do the aggressive trade when you're in chop. And just so you guys understand the significance of doing it that way, if we go back here to December, right here in December is where I started that. Right? This was Christmas week right here. Okay, in December. And it was really choppy. And that was the type of trading that I was doing in that really choppy period, was this. Because it was really choppy and the markets weren't moving all that much. When the markets do start moving, you get longer leg lengths, then the conservative trade is the one to do, right? Where it comes out of the overbought, comes out of the oversold. That was one of the other points that I wanted to make, right? I really had those couple of points. And I want to go over some of the other things that we did. And, you know, in the month of April, we had a really good month because, well, I mean, you can thank Trump for the beginning part of it anyway, for creating the volatility that we needed, that we like to have. He gave us tremendous volatility. And then, you know, just the trade setups were just there. They were plentiful. They were over and over and over again. I had one of the days this month, I think I had 60-something trades, right? that? Oh, that's December. Go back to this month. Yeah, this month. 56. I thought I had 60 this month on one day. Maybe it was last month. Oh yeah, here it was. 60 right there. 63 right there. Right, when that was in March. Okay, but in April, once Trump started his stuff, we started to get some really good days right here on April 1st. And then my best day right there. That was my best day. My best day in my best month. Good stuff. I had said at the beginning, 2025 was going to be different, and it sure is. I'm going to stick with 10 contracts all year long. I don't know. Looking at the group of people who are in here right now. Does anybody have any questions about any of the stuff that I'm showing you or doing? Anybody? Would I be interested in doing a live session on the NQ so you can call it in action? I do live every day, but you talking about doing a separate one from what I do in the morning? I'm not opposed to doing a live session for you guys as a one-off thing. Like instead of doing a meeting like this on a Wednesday, I could just do an hour of live trading with you. Or I could just trade live right now. We have 7 minutes left. We might get a trade in here in the next 7 minutes. We're on a 47 range NQ. This right here, what I'd want to see on this, I would want to see it pull back to this level right here. That would be a great spot to be trading. Okay. Let me explain that. Let me find my NQ DOM first. Here it is. Okay, here's my NQ DOM. So let me make sure that is always on top. It is. Okay. And so this is a good spot. If we get an up close on this, it'd be a good spot. Now this is a 47 range, so it's going to be 12 points above the bottom of the bar. It's got a low here of 38, so be buying 50 right there at 50. Right, right in there at 50. Minute 46. But now this has got to equal 50 for me to bump the stop to break even. Right, that number right there is going to equal 50. I have a 60 by 75 bracket on this. A 60 by 75 bracket. All right, so my stop is right. Well, we're back in profit right now. But my stop is 60 ticks away down there. All right, now that equals 50, so I'm going to bump my stop to break even, and now I'm going to start locking in profit. We're at 46. We're in at 46, so I'm up to 50. Oops, 52. Okay, I just dropped it at 52. 46 up to 52. That's 6 points. So that was 24 ticks I just made there. 24 ticks with 10 contracts on. Okay, so whatever that ends up being. Let me just check and make sure that that's what my fills were. Okay, I was in, yeah. So that was, that was like a trade that I do in the morning. All right, where I'm able to see it coming and tell you what's going on and put the trade on and do all that. But that is what I do in the morning. This green arrow was a mid-trend trade. That's not what I was going off of. Okay, but that's the mid-trend trade. I know it looked like that's what I was going off of, but that's not what it was. But that's what I do in the morning, and that's what I mean. I wouldn't be opposed to doing that with you guys, but I just don't want to. I don't want to have like, in the morning where I do 9:30 to 11:30 every day. I don't want to say with you guys I'm going to do 3 to 4 every day. I don't want to do that. I would, if you guys are going to show up for it, I could do something like that on, as time permitting basis. I could do something like that once a week maybe. Just do an hour of trading with you guys. But I mean, that's the stuff that I do all the time. The same stuff that I do all the time. And that trade right there was, this blue is similar to the one that we have in the morning. This blue right here is the regular trigger, right? If you go in here and we just shut off that guy, that's the regular trigger. That one right there. Okay, if we display the optimum trigger, you see that's the regular trigger. And the other one was to show divergence. That was to show divergence. So the trade that I was doing was a divergence trade in there. But you know, that's what I do all the time. Like this right here, waiting for it to come out of the oversold. Just this coming out of the oversold right now would be a trade, right? It's at 357. It's not the best time to trade. It's not a bad place to trade. When I say place to trade, I mean this. You would take this right here, right? And you'd go from the last time you had a full cycle from here. I guess you could almost do it from here. Yeah, you could do it from here. From right here. Like that. Okay, so this is your 50% level right here. This is a good spot to enter a trade. It's 50% retracement of that last leg. It's a good spot to enter a trade. It should go from here up to here right now. That's what it should do. Okay. Now, when it came out of the oversold, let's get rid of the other line down here. Okay, let me close that and get rid of the other line down here, and I'll show you. Get rid of that. Okay, so right here where it came out of the oversold, this would be a conservative long trade. Okay, your entry point should be right about here, right about in here somewhere. Okay, so you could enter. You could enter right now if you wanted to. I just popped it on. Here it is. Okay, so if this number equals 50, then I'm gonna bump my stop to break even. All right, with 10 contracts on. That's what I'm looking for. That number to turn to 50. And it almost got there. It's at 40. There it is. Stop to break even. Okay, so now I don't have any risk on the trade. I'm in at 81.25, so I'm just gonna lock it a little bit. There's 8 ticks. Okay, so I have 8 ticks locked in. Now I'm out with 8 more ticks. 8 ticks on the NQ isn't a ton of money. It's $40, but with 10 contracts on, it's $400. So it's not that bad. When we hit right here in 2 minutes, you're gonna have a gap. It's gonna start to move quickly, probably. After you put in the password and you check the div line, is everything else showing up right in there, Mark? Okay, the div line on this side, if you have display optimum trigger on, your div line is not going to work. You got to shut the display optimum trigger off. Okay, and then the div line will work. See, if I put it like that and then I turn that on, it shuts that off. Okay, it's the combination that you have there that's not working. Okay, that's because the optimum trigger. I should probably try to explain that. Try to explain it. Let me close that. In here, the optimum trigger. When you turn the optimum trigger on, I didn't want it to be distracted by all the other things over here, so I only enabled what you needed, and everything else is disabled. I should have probably disabled the extra horizontal lines too, but I didn't. You see the fast movement here at 4 o'clock. That's what I was talking about. Okay. Could I explain the pullback again, James? Late in the day. Okay. What I was looking for at the time, I was looking for divergence. I think it was somewhere in here that I was looking for that, right? Right in here. I think on this one. I was looking for the divergence between the 2 lines that I had on there, and this is what gave the divergence. That's why I took the trade on that one, I think. I think that's where I did it. I'm not exactly sure. It might have been over here. I don't know. But what I was looking for in there, James, was I was looking for divergence. Like right now, there might be divergence right here. All right. Now it just totally flipped. There's a gap again. This time of the day at 4 o'clock. A lot of times you're going to get those gaps. So you want to be very careful trading at this time. But what I'd be looking for if I were doing the divergence trades, or the aggressive trades. Remember the 3 different types of trades? There's the aggressive with the trend, there's the conservative with the trend, and then there's just the aggressive without the trend. The aggressive without the trend, you would do it with no color in the background, right? You'd just be looking for when you have the divergence down here. Right? If I shut that off and I put the div line back on here, you'd be doing it just when you have divergence down here between the black and the blue. You'd be trading. Right? If the blue goes in the overbought by itself, you sell the open to the next bar. If it goes in the oversold by itself, you buy the open to the next bar. And that's all you'd be looking for. Okay, again and again and again. When you're doing that, you have to be in choppy markets when you're doing that. That's not going to work in a trending market. It works best in choppy markets like this. Okay, that's when you want to do that. And to actually get it closest to what I do in the room in the morning, you wouldn't do this div line, you do this div area. Now, by default, it's going to be an area like this. Just change it to a line like that. Okay, and get rid of that div line. This will be closest to what I do in the morning. It's not exactly the same, but you'd be looking for the same type of thing. You'd be looking for divergences. When the blue line gets into the oversold by itself, it gets into the overbought by itself. And if it's overbought by itself, you sell the open of the next bar. If it's oversold by itself, you buy the open of the next bar. It's as simple as that. All right, you don't have to have the background color because you're being really aggressive. Now, this is going to work well when you're in chop, but it's not going to work at all when you're trending. When you're trending and you get the flat spots, it's going to stop you out almost every time. So you have to understand the difference. All right, it's important that you understand the difference in there. And if you want to do the conservative trades, you got to have the TV trades on so you have the background color. All right. Now, for those of you guys that watch the morning session with me, we use the YBR in there. This is more sensitive than the YBR. The background colors here are more sensitive, a little more accurate than the YBR. And if you're doing that, then you don't need that, right? You're just using this line. This is the TV trades range trigger. Okay. All right. So let's go to the end and see if we have another trade setting up here. I know, the markets are a little screwy right now, but let's see if we get another one right here. We'll just do, if I can get one right here. We'll bring this over. See the spread that's in here on the NQ? I'm not going to do that on the NQ. Let's see if we can do it with another market. It doesn't have to be the NQ. Let's change it to the ES and see what the ES looks like. I'm not going to do the ES on this time frame though. The ES, I actually switched down to a 7 range on the ES, so I'm going to go back to the 7 range for right now and see if we get something. We don't have anything right there, but my ES DOM is right here. So we'll see if we do get something. I just missed it. It was right here. Okay, so what I'd be looking for right now is for this to get into the oversold like that and come out of the oversold. It's jumping around too much. I really don't feel like playing around with this. Not with 10 contracts on. But what I would have taken is the up close of this bar right here, being conservative in the up close of that bar, the up close of that bar, but it's still jumping around too much. It's choppy too. So because it's choppy, I'd want to be aggressive, which would be the open of this bar or the open of this bar, or if that gets into the oversold, it'd be the open of the next bar because it's choppy right here. I'll show you what that looks like if I can. I hope it just went to red. Okay, so now we're going to be looking to sell the open of the next bar. Okay, there it is. That's what it looks like. So now I'm going to get ready to go to break even. Stop to break even after 4 ticks in profit, and it just took me out of break even. That's what it looks like. Hey, this is not a good time to be trading it, but that's what it would look like. Right there, I would have just sold, and I would have just stopped out incredibly right there. Alright, I've run over a little bit, guys. So let me show you. If you haven't taken a free trial with us, go here to my trading. No, I'm sorry. Go here to tvtrades.com. Gosh, I almost said that completely backwards. Go to tvtrades.com and click on any one of these orange buttons. It's going to bring you down to the bottom. If you sign up today, there's actually a 4-day trial. There'll be there'll be a link in the email that goes out with this afterward. If you sign up today, it's going to be a 4-day trial. And after the trial's done, it's $25 a week, $9 a month, and $9.97 a year. Okay, you can go from one to the other if you want to. Most people start out with the monthly, or most people end up in the monthly anyway. A lot of people start out with the weekly because it's only $25. They don't want to risk anything, and that's fine. That's like half a tank of gas, or a slice of pizza, or maybe a whole pizza, depending where you go. A couple coffees at Starbucks, I guess. But either way, you can get into it. Could be a life-changing event for pocket change. And that is it, guys. With that, I am going to wrap this meeting up. At least I'm going to wrap up the recorded part of it right now. And